If you want to understand why the world is standing on the edge of an energy, debt, and trust crisis, stay until the end of this video because you're about to witness the great divorce between oil and paper money. A divorce where one side represents real power, oil, gold, rare earths, and the other represents illusory power, paper, credit, and faith. This isn't just another economic story. It's a slow-motion geopolitical thriller. A silent war between what is tangible and what is printed, between the ground that holds true value and the ink that pretends to replace it. The story began in 1971 when President Richard Nixon ended the convertibility of the dollar into gold. The Bretton Woods system collapsed, and from that moment, the U.S. dollar became the new center of the world, no longer backed by gold, but by belief. Yet belief alone is fragile. To preserve it, America needed something else. Something the world could never live without. That anchor was oil. In the 1970s, the U.S. made secret deals with Saudi Arabia and other OPEC nations. All oil sold globally must be priced and paid for in U.S. dollars. Thus was born the Petrodollar system. From that point on, whoever wanted oil needed dollars, and whoever had dollars could print, borrow, and consume more. America became the financial empire of the world, a world where green paper ruled every energy transaction. It was a power marriage. Oil, the tangible wealth, married paper, the invisible trust. But deep within that relationship lay inequality. Oil brought real substance, energy, power, life. Paper brought only promises, and those promises depended on everyone else believing the same story. For half a century, that marriage looked blissful. Oil producers stored dollars, deposited them in U.S. banks, bought U.S. bonds. Dollars circulated everywhere, creating an illusion of endless prosperity. The U.S. could fund wars, build empires, and expand its debt without fear. After all, the world demanded dollars to buy energy, and so the demand never stopped. But behind the glow of prosperity was a silent infection. When real value is replaced by paper printed from nothing, a sickness begins to spread. The Federal Reserve could print trillions without producing a single extra barrel of oil, an ounce of gold, or a gram of lithium. Meanwhile, the nations holding true resources began to realize they were selling the real to receive the imaginary. As the printing continued, inflation quietly ate away at trust. By 2008, the first cracks appeared. By 2020, when trillions more were injected during the pandemic, the illusion shattered. The world began to question, what truly backs this paper we call money? Then came 2022, the spark that set everything ablaze. When Russia invaded Ukraine, the financial world entered a new era. For the first time in modern history, the assets of a sovereign nation were frozen. Roughly $300 billion of Russia's reserves held in Western banks were blocked by the U.S. and the EU within days. The world was stunned, because if a major energy power like Russia could lose its wealth with one keystroke, who would ever feel safe holding assets in dollars again? That was the moment when paper lost trust, and oil, together with other real assets, started asking for a separation. Central banks across Asia, Africa, and the Middle East quietly took notes. They began stockpiling gold again, as if the planet suddenly remembered what value truly meant. Out of that shock, a coalition emerged: BRICS, Russia, China, India, Brazil, and South Africa, the alliance of those who hold real assets. Russia owns oil, gas, coal, uranium. China holds rare earths, gold, lithium, solar energy, and mining technology. India has a young population and a booming energy sector. Brazil and South Africa own metals, ores, and minerals. They looked at each other and realized, as long as we sell resources for dollars, we will forever serve America's power. So they began saying no to the dollar. China bought Saudi oil in yuan. India paid Russia in rupees. Russia, Iran, and China signed bilateral deals in local currencies or gold. A parallel financial system quietly took shape, outside Washington's control. It was like watching a slow-motion earthquake, silent at first, but destined to shake the foundations of global finance. And as the tremors grew, Washington panicked. Like a husband terrified of losing his spouse, America began to fight back fiercely. It didn't just sanction, it ordered its allies to cut energy ties with Russia. The EU, once importing nearly 30% of its oil from Russia, slashed it to under 2% in just 2 years. Europe plunged into an energy-driven inflation crisis, gas prices soaring sixfold. But that was exactly what America wanted. When Europe stopped buying from Russia, it had to buy from the U.S. Liquefied natural gas from America flowed to Europe at prices 3 to 4 times higher than domestic U.S. levels. Dollars flowed back home. At the same time, America used trade wars and tariffs to split BRICS apart, imposing 50 to 100% tariffs on Chinese imports, threatening India with sanctions, pressuring South Africa for joining naval drills with Moscow. All of it aimed to break the bond between real asset nations. Washington knew if BRICS stayed united, they could build a new payment system without the dollar. And if that happened, paper would lose its spouse, and the dollar its crown. By now, every oil barrel, every trade deal carried double meaning, a price tag, and a political message. Paying for oil in yuan or gold was no longer just commerce. It was rebellion. For 50 years, oil had been priced almost exclusively in U.S. dollars. But between 2023 and 2025, that began to change. Saudi Arabia, once America's closest energy ally, announced it was ready to sell oil in yuan or BRICS currency. Iran and Russia signed oil for gold deals. China launched the Shanghai Oil Exchange, where trades in yuan could be converted into gold. The world was no longer dollar-centric. It was becoming value multipolar, where real assets returned to center stage. For America, this was a nightmare. If oil no longer anchored the dollar, trillions of dollars circulating globally would lose their reason to exist. The dollar could weaken, U.S. borrowing costs could soar, and the empire of debt would begin to tremble. But oil was only the surface. Beneath it lay a deeper struggle, a silent war for resources. While the U.S. defended its financial dominance, China quietly accumulated gold, tightened its grip on rare earths, and invested heavily in lithium, the lifeblood of the electric age. Official data showed that China controlled over 70% of the world's rare earth processing, from mining to refining to magnet and battery production. If Beijing stopped exports tomorrow, Western industries, electric vehicles, defense, aerospace, would freeze overnight. Russia, meanwhile, held 16% of global uranium reserves, fueling Europe's nuclear plants. Iran and Venezuela, long sanctioned, possessed vast oil reserves that BRICS nations eagerly bought. Piece by piece, a new power mosaic began to form, and every piece removed from the dollar system weakened the empire further. The United States understood that if this divorce ever became official, it would end 70 years of financial supremacy. So Washington turned to its classic tools: persuasion, pressure, and power. The IMF and World Bank became marriage counselors of the dollar order, binding developing countries with loans and conditions that ensured loyalty. It poured tens of billions of dollars into Ukraine, not only to contain Russia, but also to prove that the dollar remained the world's most powerful weapon. It pushed Taiwan to ramp up chip production, controlling the arteries of global technology, and re-entered the Middle East to lure oil monarchies away from Beijing and Moscow. This wasn't just economics. It was a war for dominance between paper and real assets. Every negotiation, every sanction, every summit was another courtroom session in the world's most expensive divorce case. By August 2024, that courtroom trembled again. The BRICS summit in South Africa expanded to include 6 new members, among them Saudi Arabia, Iran, and the UAE, the titans of oil. It was the loudest warning ever fired at the dollar system. These nations no longer wished to share the same bed with the dollar. They announced plans to study a common settlement currency backed by gold or a basket of tangible resources. For Washington, this meant true panic. A currency backed by oil and gold would challenge the reign of a green note backed by debt. It was as if oil had already packed its bags, while paper stood at the doorway, refusing to sign the papers. Even America's closest allies began to tremble. Europe, once loyal to the core, became a casualty of U.S. policy. Soaring energy costs, rampant inflation, and weakening industries pushed German and Italian factories to relocate to the U.S. Japan, once the Asian pillar of the West, struggled to defend the yen while still paying for oil in dollars. More and more, America's friends grew exhausted in this marriage. They began to ask themselves, should we keep depending on a currency that makes the whole world catch a cold every time America sneezes? Their hesitation was the sound of tectonic plates shifting, a slow, grinding transformation that would soon redraw the world's map of power. Today, the divide is clear. On one side stands the paper money bloc, the U.S. and its Western allies, fighting to preserve the existing system where everything revolves around the dollar. On the other side rises the real asset bloc, BRICS, and the Middle East, demanding a return to real value: gold, oil, gas, rare earths. Like a marriage that lasted too long, both sides know the trust is broken, yet the divorce would be unbearably painful. If paper loses oil, it loses its very purpose. But if oil walks away from paper, the world will have to redefine its entire financial order, a global reset unseen in modern history. And while most people watch the stock market tickers, the real story is being written in barrels, tons, and ounces, not on trading screens, but deep within the earth. History, as it turns out, loves to rhyme. In 1971, America cut gold from the dollar. Today, oil is cutting itself from the dollar. The cycle repeats. But this time, the U.S. no longer holds the scissors. Nations have seen that when real assets can be frozen with a single click, they need a new system, one built on what cannot be printed, deleted, or seized. The divorce between oil and paper isn't just about money. It's a divorce of global trust. One was born from nothing. The other was born from the earth. And like every breakup in history, it will not be gentle. It will be filled with schemes, wars, and market crashes no one expects. The ground is shifting, the vows are breaking, and this time, no superpower can stop what has already begun. You are living at the moment when history is redefining power itself. Watch this entire series to understand how the great divorce of the century is reshaping finance, energy, and geopolitics. Because once you understand it, you will no longer be swept by the tide. You'll become the one who owns the future.